right, thank you, Thierry Kalisa, for making time to speak to the New Times. So we've just seen an update, an economic update that you've given here today, and you're looking at headline inflation, which declined from 14% in 2023 to around 4.8%, and largely, from what you say, it's because of the easing international commodity prices, past monetary policy decisions, but also some good domestic agriculture, production that we've seen over the years. When you look at these factors, which one played the biggest role, and to what extent would you attribute this decline to monetary policy decision rather than external factors?
Thank you for having me. It's a good question. You summarized it well. I think it's difficult to say that it's attributed more to this or that. Everything is interconnected, and as you said, we ended the year with an average inflation 2024 of 4.8%, and the midpoint of the target range is 5%, so we were very close to that. But we're coming from 2 years, 22 and 23, where we're close to 14%, and that was very high, and way above the target range of 2 to 8%. So what we are doing during that period is to do everything possible to bring inflation down. Not only the central bank, but also all other government institutions were involved. Other decisions were taken to also mitigate the impact on this high inflation to the population. You've seen subsidies on fuel and things like that. We've seen also that the Ministry of Agriculture has put efforts to try to improve the agricultural production, and all that was working together. So the central bank did its part by increasing the central bank rate up to 7% gradually, and the other institutions also played their part. And all of this at the end gave the result of 2024, where inflation came down. So the combination of the three factors, thanks to good preparation and of the Ministry of Agriculture, and also good climate condition. Unlike the past years, we had very good agriculture production, season A 2024, where actually many of the food prices went down. So not only low inflation, but sometimes negative inflation in some of the products. We saw the main, to give you an example, really the main products that affect our inflation and consumed by people are dry beans, Irish potatoes, things like that. So we saw that their prices went down in the first half of 2024, beginning of 2024. So that created a good base effect, reduced inflation. And on top of that, you have the impact of the previous monetary policy decisions that affect more core inflation, which was stable. Right. And in addition to that, the global commodity prices went down, so our imported inflation also reduced. So combination of all these factors is the reason why inflation was stable in the year 2024.
And then beginning of this year, we seem to have seen a trend, a sort of increase. When you look at last month, we saw an increase of 6.3% in inflation. Then before that, in January, it was around 7.4%. Is this a short-term fluctuation, or could it signal a potential reversal in the inflation trends?
No, we believe it's a short-term. We believe this one is temporary. And it was expected when we were communicating in February during the MPC, saying that the same way inflation, if you look at 2024, January, and even December 2023, you saw that inflation went down very quickly, from double digit to 9, 6. And this, obviously, the following year, will have what you call a base effect, because it went down very fast. And as I said, some of the food products had negative inflation. Then now, normal prices is actually adding to the inflation effect year on year. So January and December, prices compared to December and January the previous year seemed higher, because December and January the previous year, they actually went down quickly. So this is a base effect. We thought that this one will not last for several reasons. One, we have another base effect, whereby you remember transport prices increased in March and April last year. And those public transports, fares. And those public fares have been relatively stable since then, which means that now this impact of increase of prices of transport will fade away from March and April. So we'll have a base effect the other way around. So you will see in March, transport prices, in inflation and core inflation, you will see something coming down. Second, we have an upcoming season B, where the harvest is expected around May, June. Until now, we do not have indication that there will be of major challenges there. So if we have a normal rainfall, and that's part of our assumptions, a normal climate condition and normal harvest, then these prices of food will again slightly, we stabilize and again slightly go down around May and June. So that's taken into account. Probably in the coming months, you'll see inflation stable or slightly reducing. This is why we have put all that consideration, and we put, we had a projection of 6.5 on average for the entire year. You see, we had 7.4, 6.3, so 6.5 is the average of the, meaning some months we may have inflation coming up a bit, some other months going down below 5, but overall we should remain around 6.5, and we do not expect inflation to be above the bound.
And then based on that projection of 6.5 for this year, I'm actually very curious to understand where do you get the confidence that you can achieve that, especially based on what is going on at the moment with regional instability going on at the moment, but also the global commodity price uncertainties. Yeah.
So let me start with the global. I think you're referring to, we put all that into our, let's say, risk or things that we monitor. We have things going on, trade wars, but it's mainly announcement for the moment. We're yet to see really that materializing. And the impact on global commodities is interesting to see. For us, you know that we are importers of some of these commodities. So the impact for us would be if globally commodity prices really significantly increase, which is yet to happen. It's a risk. But if you look at the global trends, we've seen the opposite. We've seen global commodity prices declining since 2023, actually. Declining in 2024 and expected to decline in 2025. We saw, let's start with oil, for example. Oil prices declining and still declining now for two reasons. Enough supply from OPEC countries and others, including Russia and others, and low demand. Actually, there's a weak demand of fuel globally, partly because globally people are more using electric vehicles, right? So that's one of the reasons, and including in China, which is one of the biggest consumers. So their consumption and the demand for fuel is reduced, which has kept these prices low and even lower. So everything that can happen and shock this would actually need to be very strong to reverse that trend. You see? So I'm not saying it cannot happen, but for the moment in our scenario, it's really probability is low that we see a shock in global commodity prices. Yeah. That's the first confidence. Yeah.
But before we leave inflation, because the idea was trying to understand the monetary policy decisions and the impact they're having. When you lowered your central bank policy rate last year twice, and then you maintained it all the way to the last round of MPC, but the inflation is still above what you call your long-term target, typically 5%, right? And I wonder whether your easing cycle has been too aggressive, and at what point would you consider a tightening again?
Okay, so to put things into perspective, we had 300 basis points, so from 4.5 to 7.5 over 2 years, an increase over 2 years. And the last year we have reduced by 1%, so we went back from 7.5 to 5.5. So you see that the period where, let's say, since COVID, with a CBR of 4.5, we are still very far from there. So according to our analysis, because that's the good question you are raising, we are trying to model and see how tight are we. According to our analysis, we are not yet accommodative. We are still tight, but we are less tight than before. So to answer your question, We take that into account and we are careful to not be too accommodative, especially when inflation is still within the band but subject to some volatility. So what we try to do is really, when we reduce the rates, reduce it really in a prudent way, conservative way, and follow up and see if inflation is in the long term within the band. That's when we are sure and then we can reduce a little bit. To answer your question, the decision of the Monetary Policy Committee is every quarter. The committee could decide to increase the rate, but that will be on condition that actually this trend is changed. So if something is happening, one of the shocks that we say, one of the risks materialize, and then the projections completely change from stable to really increasing and getting above the band, there, yes, the Monetary Policy Committee might decide something else.
Yeah.
That's not what we see for the moment.
The other thing which I think is very important, the strength of the financial sector. Banks and the financial sector seem to be well capitalized. You know, the assets are strong, looking at 13 trillion francs last year from the year before that. NPLs are well within, you know, the acceptable levels. And then you said you did stress tests, and those tests proved that the system, the financial system, is sound and stable, especially for banks and microfinance institutions. One of my professors a few years ago told me stress tests don't work. Even before the 2008 crisis, you know, there were a lot of stress tests were being done. But I don't want us to go into academic work. I'm very interested, the last round of stress tests that you did, what were the results? What did you find out? What scenarios did you look at?
All right, it's a very good question. What do you put in a stress test, right?
Yeah.
Normally, the stress test is to say, this is what we see, this is what is happening. What if something extraordinary happens? What if we have a shock to the economy that is leading to some people not being able to repay their loan, and what will be the impact on banks, and et cetera, et cetera. So we have different scenarios at different levels. So we don't have we have stress tests that from the less pessimistic to the most pessimistic, which is even an extreme one. Say, what if, I don't know, something very unlikely, but if it happens, what will be the impact on our banking sector, on our financial sector? So without getting into many details, what we try to do is, when we do scenario 1, scenario 2, scenario 3, which is more pessimistic, then we see that actually our buffers, the buffers are there in the financial system, and our system is sound and stable. It means that the damage to the system in terms of number of banks that may collapse and etc. is limited to the extent that even on the extreme scenario, which we know is unlikely to happen. But as you said, COVID, the financial crisis, there are events that nobody could predict. This is why it's important for any economy, especially a developing economy like us, to have strong buffers. And we do have them, to have a stable system, so that if something like that happens, which we cannot anticipate, then we are ready to face that. And that's the reason behind this stress testing. But yeah, in a nutshell, I can assure you that they are very extreme.
What does the optimistic scenarios show? Or what did it show?
The optimistic scenario, so the baseline scenario, the one that we are presenting basically, is the situation now, but we also have baseline forecast. The baseline forecast is what is most likely to happen. For this, it is stable. Then you shock the baseline scenario. You say, now, what if something goes wrong? And you amplify this shock. From the most pessimistic to the most optimistic, they all say that our system remains stable. This is why we can say with confidence that it's stable. Actually, that's how it works. Yes.
Okay. Last question on the financial system. I think you said you have now 70 non-deposit taking institutions that have been licensed, but the concern that was raised is that most of these were during the licensing process. You actually realized that they didn't have strong governance structures, but also their mechanisms of pricing were very abusive. How have you addressed this?
That one is a work in progress.
Yeah.
I think this is work in progress. We are aware of the issue, but it's work in progress. We needed to start with guidelines then start having them, so understand the issues, and now this is something that we are going to work together with these institutions, yes. But for more details, we can probably discuss later.
All right, thanks a lot.
Thank you very much.